Buying your dream home is, in reality, the most devastating financial mistake you will ever make in your entire life. Juan bought a 3,000 square foot house in a new development 40 minutes from the city. It has 4 bedrooms, 3.5 bathrooms, high ceilings, and a 2-car garage. The purchase price was $475,000, and his mortgage is $2,800 per month. He believes that is the cost of his home, but it is not even half of it. If you feel like your dream home is financially suffocating you, make sure you stay until the end, because we will reveal the exact formula that banks use to make you believe you can afford a mansion when, in reality, you are signing your poverty sentence. Let us begin. Juan's first electricity bill in the summer was $430. Cooling 3,000 square feet requires an industrial-sized air conditioning system running constantly. In winter, his gas bill was $370. His property taxes are $6,200 per year, which adds up to $517 per month. The home insurance costs $2,400 per year, another $200 monthly. Additionally, he pays a homeowners association fee of $220 for services he almost never uses. Adding it all up, the total is terrifying. Mortgage, $2,800. Utilities, $600. Taxes, $517. Insurance, $200. HOA, $220. Water and trash, $140. The total monthly cost to live in that house is $4,777. That means $53,724 per year just to keep the doors open. Juan earns $92,000 per year, but after taxes, he takes home about $62,000. His house consumes 87% of his actual income before buying food or gas. The belief that keeps you poor is that bigger is better. You think that buying the largest house you can afford means you are winning, that square footage is synonymous with success, and that your home should impress your neighbors. You believe that the mortgage payment is the only major cost. That is the story that real estate agents and banks sell you when they approve you for the maximum loan, and it is financially catastrophic. The bank told Juan that he could afford a mortgage of up to $500,000 based on his income. The lender lied. They calculated his payment ability based only on the monthly installment, ignoring that a 3,000 square foot house costs 2 or 3 times more to operate than a 1,500 square foot one. According to energy reports, households with large spaces spend 70% more on basic utilities. Juan spends over $7,000 per year on utilities, while in a smaller house he would spend about $4,200. That difference of $2,800 per year is money Juan does not have. And utilities are just the beginning. Larger houses have higher taxes and more expensive insurance because the replacement cost is greater. Additionally, they require more furniture to not look empty and need much more maintenance. A large house means more roof to repair, more HVAC systems to maintain, and more exterior to paint. Analyses show that the annual maintenance of these properties averages 4% of the home's value. For Juan, that should be $19,000 per year, but he only budgets $3,000. When the roof fails or the air conditioner dies, he will not have the money because the house already consumes almost all of his salary. If Juan had bought a 1,500 square foot house for $275,000, his reality would be different. His mortgage would be $1,600 per month. His utilities would drop to $350, and his taxes and insurance would be nearly half. The total annual cost would be $30,680. The difference from his current mansion is $23,044 per year. That is money Juan could save, invest, or use to enjoy his life instead of channeling it into an excessive house. In 5 years, that difference adds up to $115,220. Juan gave up that potential wealth to live in a house with rooms he never enters. The financial damage also affects his retirement. At 34 years old, he barely has $6,200 saved. If he had saved 15% of his income, he would have over $100,000. At his current rate, he will reach old age and poverty. The house is not building wealth, it is preventing it. Furthermore, he is just one layoff away from foreclosure because he does not have an emergency fund. Many buyers ignore the cost of furnishing until they move in. Juan went from an 800 square foot apartment to a 3,000 square foot house. His old furniture disappeared into the space. He had to spend $18,000 on new furniture so the house would not look sad, and he did it using credit cards with 19% interest. Now he pays interest on a furniture debt he did not need for rooms he does not use. The house demanded that expense. In a smaller house, his original furniture would have been enough, and he would have saved over $23,000 between purchase and interest. The problem is that the house feels like an achievement. Juan feels successful when he has guests over, but that feeling is expensive. Moreover, these houses are often built with cheap materials to maximize the builder's profit margin. Laminate countertops, pressed wood cabinets, and cheap finishes. In 10 years, the necessary repairs will cost over $60,000. Juan will not have that money and will end up taking out more loans or letting the house deteriorate. There is almost no correlation between house size and life satisfaction once you pass a certain threshold. Studies show that people in houses between 1,200 and 1,800 square feet report the same levels of happiness as those living in mansions, but with much less stress. Large houses do not make you happier. They make you more of a slave to work and to cleaning. Juan regularly uses only 3 rooms: his bedroom, the kitchen, and 1 bathroom. The rest is expensive, taxed, and insured waste. Escaping requires admitting a mistake and being willing to move to something smaller, which is emotionally difficult. If you are considering buying or are already trapped, first calculate the true total cost, not just the mortgage. If it exceeds 30% of your gross income, you cannot afford it. Second, buy half the house you qualify for and invest the rest. Third, if you already have a large house that is suffocating you, run the numbers to sell it. If the cost difference is more than $15,000 per year, sell. Ignore what others think. They do not pay your bills. Prioritize operating cost over total square footage. A small, well-built house will make you happier because you will have money to live, not just to survive. Juan appears to be living the dream, but in reality, he is trapped by a $53,000 per year anchor. Do not let your house be the obstacle that prevents you from achieving true financial freedom. If this analysis has made you rethink the size of your ideal home, give this video a like and subscribe to learn more about finance. Share your opinion in the comments about whether you think space justifies the cost. See you in the next video.